The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. So today I'm going to be just going through some major pairs, major currency pairs, the US dollar crosses. The playbook I tried to make as simple as possible, traders. Although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure it can catch its prey. It may hide in the bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, preferably one that is sick or lame. Only then, where there is no chance it can lose its prey, does it attack. That, to me, is the epitome of professional trading. I encourage traders to really understand the Monday, Wednesday, Friday template, the opening range and initial balance. Monday, Tuesday. Wednesday is a reset day. So all these other counts, all these other minutia of jargon and things, that it's a very simple model. Today's video is going to demonstrate that. 3-day setups, 3-session setups. Even the signal days. I'm not even going to talk about signal days today. We're just going to demonstrate major currency pairs and the timings. Day trading 1 hour a day, occasionally 2, depending on the timing of the best trade candidate opportunity. If you get a first hour, you can also possibly have a second hour trade as well, maybe trading 2 hours in one day, 2 best trade candidates. Now, we had several opportunities this week. I'm going to be talking mainly about the New York session in this video because that is 99% of my trades are just New York. Occasionally, I will have an Asia session parabolic, but my main focus is the 9:30 New York open time and the first hour for gold and currency pairs, if indeed there is a best trade candidate. Whenever we have major red news in that first hour, that can typically push that back into the New York open timing window. And if we have major red news after 9:30 a.m., for example, 9:45 a.m. or 10 a.m., for me, that pushes back the start time also. And we're going to demonstrate how that can occur, and focusing just in this video, demonstrating without anything other than just the understanding of the importance of timings. Just before we get started, I want to show my favorite trade of the week. This was, I think, one of the best trade candidates. We're going to just go through this just step by step. This is a 15-minute chart. Monday formed our opening range on the NASDAQ. I'll just move this out of the way. And Tuesday gave us our initial balance. That was an inside day on Monday. So again, our closing range was Friday, did not get broken. We had an inside day that gave a perfect reversal trade on day 2. We're going to just talk about major currency pairs, but I want to show the opportunities that were there in the U.S. window. New York open 9:30, just as our timing window talks about. Once you start seeing this, you will not unsee it. Equity markets, 9:30 a.m. Everything else is fugazi. Wednesday is our midpoint range of the week. And we had parabolic opportunities on day 3 at the open at 9:30 on NASDAQ and S&P for parabolic opportunities for range expansions, beautiful trade opportunities. On Wednesday, our day 3. Then heading into Thursday, that's our day 2, heading into the closing range of the week, we had a market that was in consolidation the entire session until expanding the range in the New York window. And then heading into our Friday, We had an absolutely golden opportunity for a parabolic range expansion. We had higher highs on Free Cash Friday that went even higher heading into our U.S. window. And at 9:30 New York time, our equity market opens. We have a dump and pump template for a range expansion opportunity that coincides with our high of day level for a fantastic parabolic range expansion opportunity on Free Cash Friday. This to me was one of the best trades of the week. Several traders nailed that in line with our universal entry criteria. Point I'm emphasizing in today's videos is understanding timings and the templates and the opportunities that you have. We're only going to be talking about the major currency pairs today. Once your skill set dictates scaling up to other instruments, the templates are the same. People ask me all the time, what about crypto? What about futures? What about shares? Well, number one, you need to be understanding whatever instrument you're trading, whether it's penny stocks or large blue chip funds. You need to back test that. You need to understand the timings are the same. If it involves markets, if it involves money and people, the game is the same. Shift money from the many to the few. So the templates will work on any market. You have to find the best instrument. Today we're going to show different trades, different instruments on each day, major currency pairs. And the purpose of that is to show you the simplicity of sticking to best trade candidates and having a process and then mastering the execution of these setups. How a best trade candidate presented in each one of the New York sessions this week, Monday to Friday, for 5 best trade candidate opportunities strictly on the major pairs, oil, gold, and the indexes. But for simplicity's sake, I'll target mainly currencies because as I mentioned to traders, if gold and oil and even the indexes are outside of your experience or your current level of comfort in terms of trading them, I'm going to be using 15-minute charts just to demonstrate the critical nature of timings and how that understanding of lows and highs of the sessions, the day count, Monday to Friday template, day 1, day 2, day 3, how simple things can be. Most important thing, obviously, is finding the best instrument for a best trade parabolic setup. Now, somebody asked me in one of the recent comments, can you go over your analysis for taking a trade? Now, there's in the previous playlist that I just mentioned, and several, at least over 100 videos, I go through the taking the trade. The universal entry criteria is very straightforward. It's very straightforward, but there's only 2 types of trade setups. Once you have your larger thesis in place, it's either a pump for a dump or a dump for a pump. They can be reversals or trend trades within that Monday to Friday template. Now, we'll talk about the template again. The only reason you'll have analysis paralysis is by diluting things down and mixing all kinds of concepts into something that it isn't. It's timings, levels, behavior of price. And they either pump and dumps or dump and pumps. That is it. That's simple. It's reproducible. Everything else is conversation, as Gordon Gekko would say. Weekly template starts on Monday morning. Monday morning starts the week off. That's day 1. That's the opening range. If Tuesday expands that range, whether on the upside, the downside, or on both sides, that becomes our initial balance. That becomes the new high and low for the week, the new week. Whether we've broken other weekly levels or not, it's still the new high and low for the week by the time Tuesday has printed. And so we get to Wednesday, that's our day 3. That is the midpoint range of the week. And heading into the end of the week, that's our reset day. That becomes day 1, heading into the closing range of the week. Thursday's day 2, and Friday is day 3, the closing range of the week. As Bill Lipschutz would say, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. My mindset around the timing window that I trade. Mindset is that I'm not chasing movement. So what I mean by that is that traders, will get up in the middle of the night to trade London if they're in the northern hemisphere. They'll trade that. They want to trade in the gap time because there's movement, or they spot something that's moving. They want to trade, between Asia and London. They want to trade between London and New York because there's movement. I'm only looking to trade the instrument that is set up for a 3-session setup for a parabolic opportunity in my session. That's it. I work from 8 a.m. to 11 a.m. 90% of the time. What I mean by 90% of the time is that there are instances, as I mentioned, that I will trade on the backside parabolic, maybe first red day in Asia on an Asian pair cross, or I may actually be in a trade between 7 and 8 a.m. occasionally, perhaps on a day 3 parabolic opportunity, if indeed that opportunity presents and starts to move earlier in that than the 8 a.m. session. That is not that is the exception, but there are certain trade setups that will lead into that, which we will go into in a future video. But everything I do is repeatable and reproducible. So I'm not interested in like trying to, stay glued to my charts or come back and, all the time in London and catch every move. I'm looking for scalable setups in that window, and it's based on the timings. Very important, because the setups are there every week in the timing window, which we'll go through in a moment. So therefore, there is no analysis paralysis, because I either have a parabolic dump and pump opportunity or pump and dump opportunity, depending on where I'm at in the Monday, Wednesday, Friday template, front side, back side. The trade setups that I take are scalable in size. So when I see people, catching moves and grabbing pips, which is fantastic. Again, as I've always said, if you're making money doing whatever you're doing and it's scalable and you can keep growing that, continue to do what works for you. I'm talking about what I do and my understanding about the opportunities that I'm seeking out in the market, because they're driven by other time frame traders. They rinse and repeat based on how the markets move each week. A great question from a trader was, what happens when everyone starts to trade like this? And my response to that trader was that, number one, nothing will change. Retail traders will trade the markets. They'll trade movement. They'll chase price. They'll never trade large enough in terms of their size or consistent enough to ever be of any concern to the larger players in the market. And here's why. 99.9% of retail traders will take impulsive, act irrational, and engage in emotional self-destructive behavior and trading, which will inevitably blow out their accounts. So they'll grow an account if they start to demonstrate some skill. They'll trade larger. They'll get overconfident. They'll be grabbing pips, catching moves, trading at random times. Act impulsively, average into losers if they get underwater, revenge trade, go on tilt. They'll act irrational. They'll engage in emotional self-destructive behavior and trading, which will inevitably blow out their accounts, most likely again and again. Number 3, they'll blow up their account and put more money back in and try again and do the same thing over again and over again, believing they're doing something different, and go back to step 1 again. Here's why I say that, because human behavior is predictable over a large sample and over time. And that's why the game will never change. The game is set up to be played that way. It's a zero-sum game. The game will never change. It is set up to transfer money from the many to the few. Which brings me back to the first slide again. I'm hunting best trade setups, not trying to trade an instrument, not trading gaps, blocks, hunts, blah, 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 and trading one instrument every day, trying to demonstrate how smart I am. I'm looking for the easy money. You make money on the days that it's easy to make money on. You make money on the trade setups that it's easy to make money on. And I'll repeat that. You make money on the days that it is easy to make money on. You make money on the trade setups that it is easy to make money on. So when I come into the timing window, whether this is over 3 days, whether it's 3 sessions, whether it's 300 pips at 3 levels, is a pump and dump opportunity. And so when people ask me, what's your analysis? I just repeat the same thing. It's either a pump and a dump or a dump and a pump setup. There's no analysis, believe it or not. When I come to the timing window, I either have an instrument that is set up like this, or for a dump and a pump, which we'll look at in a second. That's my analysis. And then I'm looking to position myself into the blow off of the parabolic move, whether this is in line with an existing breakout pullback trend continuation for low-hanging fruit, whether this is a high of week reversal opportunity, whether it's after major red news, whether it's a blow off on day 3 and in line with a Monday opening range, Tuesday initial balance, or whether it's a high of the week reversal heading into the U.S. window from a Wednesday, Thursday, Friday. It's a pump and a dump or a dump and a pump template. It's as simple as that. There is no analysis. It's either I have a template for trading or I don't. When I get that question, I honestly don't know what to say. There's 2 setups, and it's either with a trend or with a reversal, depending on where we're at in the template and the instrument that I feel is the best candidate on the day. There might be 5 candidates. My job is just to pick one. So when traders tell me they grabbed, 4 trades, my thought process immediately is why not take one if it's a best trade candidate and have 4 times the size? You're not risking anymore. If your account allows you to take 4 separate trades, if you're risking 1% on 4 trades, why not risk 4% on one trade if it's a 90-10 opportunity? Now that's my thought process. But I don't try to manage 4 trades all at once. I'm looking to where I can scale into a sizable opportunity and make as much money as I can and be done. Take the money and be done. Not trade there all day and grab as many pips as I can and try to prove how smart I am at trading the market. I'm just looking to find a parabolic opportunity, get paid, and get on with my day. So sometimes traders, will ask me questions. They don't like my attitude or they don't like my response. And I think there's just a disconnect there from where my mindset is at, where my mindset is approaching the markets, is that number one, it's to protect my capital. I'm not trying to trade the market and catch moves and, get lucky or get pips and that sort of thing. I'm only executing 90-10 parabolic trade setups. I got typos all over the place today. So if I don't have a 90-10 scalable opportunity or even a 90-10 setup for a session trade, whatever that opportunity dictates on the day in that session, my job is, once I'm able to get into that market, if it's a session trade, maximize the amount out of that potential opportunity as I can. Get the most out of a winning trade as I can. Whether it's for a session scalp, meaning that, okay, so it's a session scalp. It's not a range expansion opportunity where I'm prepared to size into that with considerable full max size. Whereas I've said before, with a session scalp, I may go 25 to 30% max size, take the trade, take the money, get on with my day. A fully loaded range expansion opportunity that's driven by other time frame traders, I'm prepared to go with the full 100% maximum size on that. And now understand what I said. I didn't say 100% of my account. I said 100% of my max size, which is going to vary from individual based on the size of their account. But when that opportunity is 90-10 and it's driven by other time frame traders, that is where traders have the opportunity to make significant amounts of money. Session scalps are still probably a day's pay for a session scalp is probably what an average person makes in a week, depending on, again, the size of your account. For some traders, it may be more than that. It may be a month's pay for some people. A fully loaded range expansion opportunity could be a year's salary, depending on the size of a person's account. So rinse and repeat. Scale it up in size. That's my motto. Parabolic setups, not catching movement. I see stuff all the time and I look and I shake my head thinking, yeah, but okay, that's great. You could never put size on that though. That's called getting lucky type of trades, get lucky trades, where you catch a move. Now, we're going to look at the timing window and then we'll understand that a bit more importantly. And why I look at everything prior to that is the fugazi, the fake out, what they want you to see before the session begins. So as I've talked about in the playbook, currencies, gold, currencies, sometimes on certain days we can see currencies in gold, even crude oil. And occasionally the indexes move in certain instances in certain types of setups, in large opportunity days, we may see movement between 7 and 8 a.m. But generally speaking, the opening ranges for currencies and gold and the bond market, I don't trade the bond market, but that market starts trading at 8:20 a.m. Now, people are going to say, yeah, but it's trading 24 hours a day. Well, I'm going to talk about the real money coming into the market. I'm not talking about the London session. Obviously, 3 a.m. To 4 a.m., the London market's open, the London equity market's open. But after they've traded, and I'm trading the New York session, these are the opening range times. So we see all kinds of movements sometimes, first hour before the equity market opens at 9:30 or before 9 a.m. on crude oil. We may see a movement in London, but that market's already moved. So now I'm preparing for the U.S. session. The U.S. session. So Fugazi is all the movement that's going on before the session opens. Before the session opens. And then once, especially 9:30 with the indexes, if you're trading the indexes, I see people trading Asia, London, great. But people sometimes are trading these markets and they're buying and holding or selling and holding. They want to hold it for 3 days. I understand, again, I'm in the market for an hour, max 3 if it's a large high of week, low of week, closing range of the week opportunity, but usually on average an hour a day. That I'm actually would be the most time that I'm in one trade. And then I'm done. I lock it in, I get off the screen. Now, what can affect those timing windows is the economic calendar. Now, I use Forex Factory. I look purely at red flag news. You can change that over in your right-hand corner. You can also look at the other, for example, oil. If you click the energy link on the left-hand side of the screen, you can identify when we may have crude oil inventory releases. If you're trading oil, if you're looking at the oil, generally I look at Forex calendar and the oil, the energy calendar, just to know when the oil inventories is going to be released. But this can affect the timing during that U.S. window. For example, if you're going to be trading a currency pair or gold in that first hour, but we have a major red news at 8:30, I will trade after that news is released. So understand that this timing window that we just looked at, this is when those markets will come to life. That doesn't mean that I have to get into a currency at 8:20 or get into gold at 8:20 or jump into the equity market at 9:30. That's when the money's going to come in. Thesis. Do I have a setup? What instrument is potentially offering me an opportunity on the day itself for a pump and a dump or a dump and a pump template? To review, Monday opening range, Wednesday midpoint range of the week, and a reset for a new day one heading into Friday, our closing range of the week. Friday, closing range of the week. Occasionally Thursday may be the high or the low of the week, but Friday closes out the week. Monday opens. In between we get a high-low, and Friday closes. Opening price, closing price. So Friday's range typically, if it is the last extreme of the week or heading into Monday is our opening range, Friday's closing range has a significant relevance heading into our new week. Now we're looking at Monday, the opening range of the week for West Texas oil, 15-minute chart. Friday, our closing range of the week. During the day prior to 9 a.m., West Texas oil trades through the low of Friday. We now have a market that is expanding the range on the downside before reversing and coming back inside prior to 9 a.m. We've put a lower low in place prior to our 9 a.m. So far, the market has traded as high as the highest price of the day. We'll move this out of the way. And at 9 a.m., the market opens up inside of this little area. Now, this is what I'm talking about with chasing price, and traders are reading all this. They got indicators, they got their 4 hour, their 1 hour, their daily charts, they got stochastics, they got MACDs, they got all these things. The market comes down to the low of day level and engulfs at 10:45 a.m. This is a 15-minute chart. At 10:45 a.m., the market gives us our reversal opportunity on Monday in our U.S. window and reverses back up to the high of day for a parabolic reversal opportunity and a dump and pump template, higher highs on the inside. So we've made lower lows, and then the market has traded back up inside prior to 9 a.m. 9 a.m., The market opens 9:30 New York time. The equity market's open. It reverses to the low of the day, coils sideways, and explodes vertically back to the high of the day for a dump and pump parabolic opportunity. 3-session setup on Monday, day 1. Tuesday, we have the Canadian dollar. It broke out of Friday's closing range on Monday, the opening range of the week. And that market closed in breakout, out of balance, which again, I've explained, if a market closes outside of a previous day's range, it is out of balance. I've spoken several times about an out of balance market, as Dalton has talked about in Market Profile. It has the potential to either reverse back into the range that it has traded within already, or continue and seek of new business and have a potential large ranging day. Monday is our opening range for the week. The market breaks through the higher low made in the U.S. window prior to our U.S. window, 8:20 a.m. for currencies. We have a lower low on the inside. When we get to our 8 a.m. U.S. session window, the market pumps up before making a lower low as our 8 a.m. window starts. 8 a.m. window pumps back up into our peak formation highs. And at 8:20, we are back up into this peak formation high. And the 9:30 New York Open, we have a large engulfment candle at our peak formation low for the range expansion on the downside for a pump and dump parabolic reversal opportunity on Tuesday, day 2. Now again, we're using 15-minute charts. There's obviously better ways to finesse these opportunities, but for the demonstration purposes of this video, I want to show traders the simplicity of pump and dump and pump opportunities. This trade setup offered traders anywhere in the area of 35 to 50, zero stress, no heat, pips of pure profit free cash on a reversal parabolic pump. Let's review this again. Lower lows, pump and dump opportunity in our U.S. window, New York, 9:30 New York Open, based on our timing window, lower lows inside of our opening range for the pump and dump reversal, 9:30 blow off move into the close of the day, Tuesday, day 2. Wednesday, we had an opportunity on the Swiss franc. Monday, our opening range. Tuesday, broke higher, expanding the range, but closed back inside of our opening range, closing in balance. But that forms our opening range initial balance, our new high and low for the new week. That market traded higher in the Asian, at the end of the Asian window into the Europe Open, and made higher highs on the inside back into the opening range high of Monday. Higher high on the inside heading into our US 12 candle window. At 8:20 a.m. our currency markets come to life. We have a high-low range and we have a dump and pump template. Our New York Open, equity market open, takes traders to the low of our box that's formed in our first hour of the currency window trading, higher high on the inside, and an engulfment 45 minutes into our third hour for the parabolic continuation trade back to the high of the week. And traders will notice that once our our currency market opens, then our equity market opens, we have a 3-push head and shoulders pattern inside into our third hour, 1 hour, 2 hour, third hour reversal for a parabolic trend trade back in line with our opening range, initial balance expansion, range expansion, as I talked about and I've gone over in previous videos. If the market gives us a range expansion opportunity, as Paul Tudor Jones says, don't fight the trend. So we have the parabolic continuation 45 minutes into the third hour for the parabolic move back through the high of the week. And on this particular pair, that's a 32 pip move of easy, no stress, free cash. Now, again, this is a 15-minute chart for traders. As their skill set improves and they're able to identify that opportunity, would be able to finesse a better price fill level. But day 1, day 2, day 3, there's 3 U.S. session parabolic trade setups for easy free cash on the U.S. dollar crosses, major pairs. Now, Wednesday is our day 3, but it also resets and becomes day 1, the midpoint range of the week, heading into our closing range of the week. And that means Thursday is now day 2, which brings us to Thursday. And early in the day in the Asian session, we broke the low of Wednesday's midpoint range of the week, and that brings this pair up on the radar that we may now have other time frame traders entering into this market, not only from the high of the day. So go back and review my other videos in the playlist, understanding other time frame traders. We have sellers above this level, and we had buyers below this level, but obviously heading into our new day, the buying pressure has weakened. They've been able to go lower before buyers stepped into this market. Now remember, we're looking at 8:20 a.m. as the open of our currency timing session heading into our U.S. window. This is just one instrument, so there may have been another better one somewhere else, a cross pair, maybe gold, maybe oil, maybe an index, but I'm demonstrating the major currency pairs and how simple this can be. At 8:20 a.m. when our currency markets come to life, we pump up into the high of day before we get a pin hammer at the very high of the day, 45 minutes into the first hour after our currency markets have opened. And we are at the high of the Wednesday's midpoint range of the week, a lower low on the inside. So again, for savvy traders, we have the opportunity. No major red news. After this, we had 8:30 unemployment release. So the news is over now, and you'll notice the news takes traders into the high of Wednesday. So we have an opportunity for traders who are savvy to enter in at the high. If they're not comfortable to do that, they can enter in on the engulfment candle afterwards. And again, understanding that the equity markets, when they open, may pump back up into the space, the gap, whatever you want to call it, for a parabolic continuation trade into the close of the day. Now, we didn't get to the low of the day, but we certainly got back to the breakout of the Asian range. And for traders who held this or took profits, I'd be out before the close. But again, zero stress opportunity heading into Thursday, day 2. So again, the most common day for traders to get chopped up on is a day 2. And there may have been other opportunities, but this is an example of an easy, after the news, day 2 trade setup in the U.S. window, major pair after the markets have opened, after major red news, for a asymmetrical risk reward continuation trade for 25 pips, which just brings us into Free Cash Friday. Now again, I know there were other fantastic opportunities on several instruments, but I'm just demonstrating the simplicity of the process. We had major red news at 8:30 a.m. first hour, and that blew off through the low of the week, which again puts this market out of balance. And that brings us first hour, and then the equity markets open and trade back into that peak formation low that was made in the first hour, jamming traders in. 1 push, 2 push, 3 pushes, third hour begins, and we have our reversal opportunity back to the high of the day for 30 pips, easy, free stress, free cash. Again, you'll notice it goes back into traders that were short from the session before on day 2. Timings, levels, behavior of price. So all the other garbage that's out there, the pushes, the gaps, the hunts, the ranges, all these things, it's timings, levels, behavior of price. There are several opportunities this week, but in terms of just looking at the major currency pairs, and even if you just took 25 pips each day with zero stress, 90-10 opportunity, those are still scalable in size. These are 15-minute charts. So I'm emphasizing the simplicity of the process. These are major pairs. There were other trade opportunities in London. There were other trade opportunities in Asia. There were trade opportunities on the indexes, gold, oil, huge opportunities. This is a very simple, winnable game, traders. So in closing, traders, I emphasize to you to make things as simple and duplicatable as possible. If it is simple and you can duplicate it and reproduce your results, you can scale it up in size. 90-10 best trade parabolic setups, trading 1 hour a day, locking in the money, learning to scale them up in size, keeping it simple. The more you complicate things with all kinds of information overload and garbage, your results will end up the same. As I talked about, most retail traders will, number one, they won't get it. They won't have it. They will never trade with edge. That's the reality. They will never trade with real edge consistently or large enough or manage themselves emotionally and stick to the process. They will do some sort of self-sabotaging behavior to blow themselves up, and they'll rinse and repeat that whole thing again, hoping that something's different the next time. Keep it simple. 1% better every single day. Timings, levels, behavior of price, and behavior of the trader. Have a great weekend, and may the markets go with you.